Friday, June 3rd, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at why the technical picture for the price of oil is pointing to a lot more pain for the world economy. And we're also going to try to prove to you that rising oil prices do not cause inflation, that they are the consequence of inflation. Before I start, though, I'd like to apologize. I've got a bad cold, and that's why I sound a little bit nasal. Anyway, I'm going to start with this book again, which I touched upon yesterday. And it's about the hyperinflation in Weimar, Germany. And on page 108, they talk about the autumn paper chase, chapter 8. And this is what they say. Only the country people were surviving in Germany in any comfort. Anyone who lived off the land had the readiest access to real values. It was not surprising that even when they ensured that the money receipts for their goods were no more than equivalent in purchasing power to what they were used to, they were accused of extortion, the more so if they delayed the sales of produce in the full knowledge that prices would be higher the longer they waited. So there you go. That's what happens in evolution of a hyperinflation. It starts with producers realizing that there's just too much money out there, too much inflation, and they hold back because they know the prices or the currency is going to become worth less and their real values are going to become worth more. And we can't blame the oil price for that. I would say we have to blame the central banks and the governments of the West for that. And the facts are very clear, as you can see here from the balance sheets of the central banks, who work together, of course, with the governments. The only reason central banks have been printing so much money out of thin air or creating reserves out of thin air is to keep financing Wall Street and government spending, the military industrial complex. I mean, prior to the 08 crisis, the Fed's balance sheet was around 800 billion. So it's gone up more than 10 times since then. And it's not just the Fed, as you can see, of course. It's the ECB, the BOJ, and the People's Bank of China. And I would say the people at OPEC are not stupid. Yes, people think, they ride camels in the desert. No, they're far away from that history, maybe 67 years ago, but they're very well educated and they're not stupid. And with that, I want to play a clip of probably the man who was kind of the Putin, maybe, of his era, because a few years after this interview he did with the BBC in 1974, he was kind of deposed. It's the Shah of Iran. There was a regime change because he wasn't playing ball with the West. So 5 years later, he was out. And you might say, oh no, it was an Islamic revolution. Well, did you know that the hostages that were kept, the U.S. Embassy hostages that were kept in Tehran, I forgot how many days it was for, but it was a long time. It is known that the CIA negotiated with the revolutionaries to keep those hostages there. And why would the CIA do that? Well, because George Herbert Walker Bush was running with Ronald Reagan versus Jimmy Carter for as a vice presidential nominee, and they wanted to make Jimmy Carter look bad. So is it any wonder that on the day of the inauguration in 1981, the hostages were released? So just think about that. Anyway, here's what the Shah of Iran said.
But may I put it this way? Many people watching you tonight, watching you talking to us now, many people in Britain, some of them cold, some of them quite poor, will be asking themselves what it is that you and certainly some of your Arab counterparts, sheikhs and rulers and governments, have against them. Does it in any way serve your interests
Well, why
to make a British economy suffer?
Why against? First of all, it's not British economy. If you want to say anything, it should be the world economy. And this is not against, we're just defending our chips. Because for such a long time, we have just been, exploited, I can't say that. And why don't you say that when the price of wheat was augmented by 300%, they had something against us? We had to buy it, or soybean, or steel products, or petrochemical products, which in some cases have augmented by 30 times. So did you have anything against us when you augmented those prices? Or what I buy from you, even weapons, the price that you are charging today is not what you were charging 2 months ago. It's increasing. Have you something against us?
Have you anything in principle against the system in Britain and other Western countries?
Not really against, but I must tell you my opinion. If you continue this way, a permissive, undisciplined society, you are going to blow up. And in matter of fact...
How do we blow up? I'm not quite clear what you mean by that.
Well, you will go bankrupt. You work not enough. You try to get too much money for the little work that you are putting up. And this cannot continue. It can continue for a few months, maybe 1 or 2 years, but not forever.
You're not going to help us not to go bankrupt if you put the price of oil in.
I won't be a good friend of yours if I did help you being not aware of the seriousness of the situation.
Do you then see oil as in some way a weapon that can correct us and our system?
Not really.
So as you can see, the BBC reporter, very arrogant, not very respectful to a head of state. And I would say the Shah of Iran gave him a lesson in economics as well. And he said that the UK would blow up if they didn't stop spending money that they didn't have, if they didn't work harder. I think at the time there were a lot of strikes and things like that. They had like a 4-day week or something. And he was right about the UK going bankrupt, because a couple of years later in 1976, the UK had to call in the IMF to bail them out. So yeah, they got rid of the Shah in 79. He wasn't playing ball. He was looking after his own interest or the interest of his country. So let's look at the oil price, why I think things are gonna not improve. And hopefully now you understand why oil does not create inflation. Oil is the consequence of inflation, because producers, they know what's going on. They know that the world central banks have basically Weimar'd to the hilt. And they're not stupid, as you saw back in the 70s. They were not stupid. The Shah of Iran was not stupid. And as he said, you know, it's not just oil prices that are going up. Everything is going up. So back to the oil price, though. This is a very long-term chart going back to like 05. And as you can see, up until I think it was March last year, oil was in a downward trend. And I remember looking at this and saying to myself, wow, it's broken out. And I did tell you, the viewer, back then that it was breaking out and that it looked very bullish. It was breaking a falling wedge. And I said, as usual, it's not going to go up in a straight line. And it didn't. But the general direction is higher. And one of the reasons I'm doing this video about oil is because OPEC just announced that they're going to increase their production. But if you put it into perspective, it's a drop in the ocean. They're increasing it by 650,000 barrels per day. They had already decided to do it by 400,000. So the recent announcement was just for an extra 250,000. And just to give you an idea, the US alone consumes about 20 million barrels a day. So this is just going to be done for 2 months. And if you add up all the other consumption around the world, I think the EU and China, they consume about 30 million a day. It's a drop in the ocean. It's not going to make a difference. It's just a management of perception. They just wanted to try to contain the price. But looking at this chart here again, you can see that ever since November last year, we've been on quite a sharp move higher. We've created like a flag or a pennant in this case. And the flagpole, of course, starts from the low in November last year, just around $62. And then we spiked up to almost 130. And now we've been consolidating, but we've broken out of the pennant. And I think we could go into the at least 150, maybe more in the next let's say 3 to 6 months. And why would that happen? I don't know. There will be, of course, a reason people give for that. A lot of the reason why crude shot up to 127, the reason being given is the Ukraine war. But if it wasn't the Ukraine war, it would have been something else. So what I'm trying to say here, the crude oil price is pointing to more and more rising prices. And it's not inflation, people. Don't let the mainstream media or a former head of the Central Bank of Canada, Mr. Poles, I think his name is, he was on Kitco saying that oil causes inflation. No, it's money printing that he did with his colleagues and have been doing for almost a decade and a half, so to speak. So there you go. That's why I think things are not going to improve economically. And that will probably make the central banks and governments stimulate even more, which is going to have more and more inflationary impact on prices, because that's what inflation is. Accommodation monetarily and fiscally. And we've already seen that fiscally in the UK. They're going to borrow another 15 or 17 billion to give money to people. And we'll have to see what the Fed does. I think they're going to pivot soon, or else, yeah. Or else the coming elections is going to be a disaster. Not that it's probably won't be for the party in power. So with that, let's quickly look at where the markets are this morning. It's just gone past 8:30 a.m. London time. We got spot gold at 1866. It's down a couple of dollars, but gold and silver did very well yesterday. And what caught my attention were the silver miners that I hold. They were up about 10%, all of them. So is this a bottom in silver and the miners? Who knows, but it's encouraging. And it came out of the blue. And why? Well, because sometimes securities or commodities just get too oversold and people start buying. That's the way it works. So what about silver? Well, silver's unchanged this morning. We're at 22.30. High's been 22.48, the low 22.23. The stock market, the Dow is down 23 points, the Dow future that is. The NASDAQ 100 futures down 60, and the S&P is down 8. FTSE is unchanged, 75.73. Eurostoxx 50 is up 10. And to the currencies now, sterling is unchanged, 125.73. The euro is up slightly, 107.50. The dollar is unchanged versus the yen, 129.86. Dollar is unchanged versus the Swiss franc, 95.65. The Russian ruble is trading at 62.5. So it's the dollar's dropped a little bit there versus the ruble. I think dollar went to 66 when the Central Bank of Russia cut rates recently. And dollar yuan, dollar's down 0.4 at 663. Aussie dollar is down 0.1%, 72.57. The Canadian dollar is unchanged versus the dollar, and the Kiwi dollar is unchanged as well. To the general commodities, WTI crude is down 0.75%, 114.60. Brent is down the same percentage-wise at 116.50. High-grade copper down 0.1% at 4.55. And U.S. nat gas is down 2.5% at 8.30. And to finish off, the 10-year yield is unchanged at 2.92%. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And yes, I wish you all a great weekend. Take care. Bye.